Welcome to JM Financial Mutual Fund's Equity Outlook. In this short video, we would take a look at how different economic and market factors behaved in the recent past. We would also look at our view on the Indian equity markets, which may in turn impact the positioning of our schemes. The Nifty index was up 1.6% for the month ended March 2024. The Nifty Mid-Cap 150 Index and Nifty Small-Cap 250 Index underperformed the large-cap indices and were down by 0.4% and 4.2% respectively. Global indices ended the month of February 2024. On a positive note, Dow Jones and Nasdaq were up by 2.1% and 1.8% respectively, and Financial Times Stock Exchange 100 was up by 4.2%. The India Volatility Index saw a decline in March 2024. It was at 12,183 compared to 15.57 in the previous month, down by 17.6%. The Chicago Board of Exchange Volatility Index saw a decline in the month of March 2024 and was at 13.01 as against 13.40 on the previous month, down by 2.9%. Sector-wise, Nifty Auto, Nifty Metal and Nifty Consumption were the top-performing indices, whereas Nifty Media, Nifty IT and Nifty Realty were the laggards. Foreign Institutional Investor, FII, were net buyer for the month of March 2024. Net FII inflows were rupees 30,897 crores. Domestic Institutional Investor, DII, bought stocks worth rupees 56,312 crores, whereas mutual fund were net buyers worth rupees 31,212 crores. Nifty 50 Index 12-month blended forward PE is now trading greater than one standard deviation above the mean PE. However, it is still 10.2% below its peak. Nifty Mid-Cap 100 Index 12-month blended forward PE is trading greater than one standard deviation above the mean PE. However, it is still 11.2% below its peak. The Indian equity markets saw a very choppy month as discussions of an overvalued equity market gained ground. During March 2024, the Nifty Small Cap 250 Index lost nearly 12.5% from its all-time highs, while the Nifty 50 Large Cap Index declined by 3%. On a 3-month basis, returns across all indices have moderated. Markets are never static and always have a significant emotional quotient. We understand that, and try to navigate risk and returns continuously across the continuum of the cap curves and sectors available. Young investors entering the equity markets for the first time also heightened the bullishness in the market. Institutions in charge of capital markets have alerted investors at large of the potential euphoria and the pitfalls thereof. Mutual funds have been asked to monitor the liquidity profile of their portfolios carefully and come up with strategies to counter sudden liquidity issues that may arise. How are we reading the situation? Macro backdrop for corporate India has never been more favorable. With India's fiscal deficit and current account deficit under check, capital costs continue to remain benign. Corporate India has a good balance sheet, and with the Make in India campaign, we are witnessing a recovery in manufacturing, which favors mid-caps and small caps more as they tend to supply global vendors from here. Add to this India's favorable demographics, China +1 and China's rapidly aging demographics, the outlook becomes more favorable. We are witnessing a very favorable outlook in textiles, auto ancillaries and light engineering goods. Further, MNCs are also planning to locate some of their new factories in India. Our conviction in this has been reinforced by several meetings that our equity team has attended. The small and mid-cap rally has to be seen in context of the following: 1. Increasing participation of profits in the BSE 500. 2. Faster growth due to niche segments. 3. Entrepreneurial energy in the form of IPOs as more companies get listed. Small and mid-cap companies seem to have turned around, and their performance on both earnings growth and capital efficiency exceed those of large caps. This means that investors could benefit from superior growth of small and mid-cap companies by investing in them. Nifty 50, large caps, Nifty Mid-Cap 150 and Nifty Small Cap 250 blended forward. PRE appears expensive from the historical perspective. However, we have to examine the valuations in the context of size, attractiveness, and quality of opportunities offered by the Indian economy over the next few years versus the past. Lower volatility, VIX, is also a positive factor which affords higher valuations. We have been expecting volatility in the markets. In the last 6 months, we have been of the opinion that investors should be cautious with their asset allocations, while ourselves keeping a razor-sharp focus on improving the overall quality and risk-reward of the portfolio month after month. At JM Financial Mutual Fund, we follow our geek philosophy, which is growth in earnings with earnings quality. We have ensured that valuations of our holdings and the beta of our portfolios remained in line with our long-term wealth creation philosophy of investing in high-growth, high-quality companies with lower volatility. Over the past few months, we have maintained a higher exposure across our portfolios to the small and mid-cap space, primarily led by the phenomenal growth opportunity, led by the revival in CapEx, as can be seen from the charts above, and improvement in return of equity for the small caps as also earnings growth. This segment fits well with our geek philosophy. We have, however, been cautious in stock selection with an emphasis for strong fundamentals and resilient financials, irrespective of their capitalization. We believe that corporate India will continue to be a long-term growth story, and earnings quality is key to benefit from the compounding effect of businesses. We will monitor the portfolios carefully and try to align the long-term structural plays with short-term bouts of volatility. That could involve reducing some of our holding and using large-cap defensives tactically to ride out such bouts and then reassessing our holdings in context of the market. We believe that the bamboo tree's flexibility is key to its survival against the fiercest storms, and we will use that flexibility to ensure that risk and returns are monitored and adequate adjustments are made from time to ride out the turbulence.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.